Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, August 20th, 5:29 p.m. Eastern Time, and I am coming to you from the financial capital of the world, St. Augustine Beach, Florida, with the big show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what you need to know for next week, and update the world famous 21 over 21 leaders list. I know you're waiting with bated breath for that. So let's get right into it. State of the market. We are in a short-term consolidation. If you take a look over here at the trend gauge, if you listened to Hunter's video last night, you know we downgraded market leaders earlier in the week. I did that on Tuesday. Last night we downgraded the short-term trend, which means some or all of the 5 major indexes that we track are underneath their 21-day exponential moving average. We had 2 closes below that. We're going to update that in this video. And on the medium-term trend, we're still in an uptrend. We use the 50-day simple moving average to track that. And long-term 200-day, we're in an uptrend. We have been for over a year now. So what just happened? Strong finish to a shaky week. We had some big underperformance in growth leaders earlier in this week, but I want to draw your attention to these green arrows and this new G5 entry that I have here under the statistics. So basically the G5 is a blended average of 5 growth ETFs that we use to track the health of growth stocks, plain and simple. We've been talking about this since the webinar that I did a couple of months back about how to keep a close eye on keep our finger on the pulse of what's going on with growth ETFs, because sometimes what they're doing is not accurately reflected with what's going on with the 5 major moving averages. So every night we're going to add this to the list to talk about how overall growth proxies are doing. And you can see strong finish to a shaky week, the G5. This is the G5 that you want, not the G5 of global leaders when they get together and decide how the world should behave. This is the G5 that you want, not that one. So up 1.38% on that, very good day. S&P 500 up 0.8%, Nasdaq 100 up a little over 1%. Dow lagged up 0.65%, mid caps up 1.17%, Russell 2000 up 1.65%. The good part of that, half of the Russell 2000 is included in the IWO ETF, which was up 1.78% today. That's one of the 5 in the G5 that we track. We've been talking about how that's been lagging for a while. Had a good day today, though. So let's dive into the charts and take a better look at what's going on. But first, let's take a look at the team running Revere Asset Management. If you are interested, or you've got a friend or family that is confounded by what to do if the market would turn south, suppose they don't want to lose 34% of their money in a 5-week span the way happened back during COVID. Suppose they don't want to lose 50% of their money that happened in a 2-year period back with the financial crisis. We're the team that takes a look at the overall health of the market and what's going on with the sectors that make up the overall market. And if we're in a bull trend, we're participating. If we're going sideways or in a downtrend, we get more defensive. And if you're interested in a strategy like this, give us a shout. You can call 855-REAL-WEALTH. That's 855-732-5932. Or you can shoot an email to any of us. Dan is the majority partner, company president. He's a CFA, one of the most knowledgeable financial people I've ever met. You can reach him at dan@revereasset.com. Our office manager, Muriel, will also help with onboarding. She can be reached at muriel@revereasset.com. If you want to talk about inter-asset correlation, Tim's our specialist there. Email tim@revereasset.com. If you want to talk about what we're doing with the portfolios, you've got Hunter, Alex, or Don at revereasset.com. We love talking markets with anybody. Give us a shout if you so choose. So let's get to the charts here. Let's start off with not General Motors, which is in a bear trend. I just looked at a chart of that and gave some advice to a client and explained to him why nothing good happens. Like a teenager after midnight, nothing good happens under the 200-day moving average. General Motors broke the 200-day earlier this week and has continued to trend lower. Note the lack of relative strength after this false breakout in June of GM. Everybody's talking about how many cars people, they can't make enough cars. Well, you can't make enough cars, you can't sell the cars. We're having a big microchip shortage. This is being reflected in the price and volume action of General Motors, and it's dropped from 54 to 40, 64 to 48 now, and we just don't get into situations like that with our clients' money. So let's get away from General Motors and let's get to the S&P 500 here. Let me blow this chart up a little bit. And what we see here is good news to close the week. So Monday, started off on a good note, closing at all-time highs. Tuesday, however, we came in with a gap down. Growth stocks underperformed, though, on Monday. So although the broad market looked good, growth stocks underperformed. They also underperformed on Tuesday and they underperformed on Wednesday. But the full market joined in that underperformance on Tuesday and Wednesday. As you can see, we broke below the 21-day short-term moving average. Now Thursday, we had a gap down in the morning, but we closed near the top of the range, but still the second close below the 21. That's what made us go to neutral on our short-term trend. However, today, couldn't ask for better action here. We opened flat, strength all day, back above the 21. Good to close the week there. We want to get a second close above there before we go back to full uptrend over the short term. Now let's talk about the 50-day moving average here. Came within a couple of less than 1% of it on the gap down, but very strong close Thursday, so we're firmly above that on the S&P 500, and then we're 10.6% above the 200-day moving average. Long-term trend hasn't been in doubt for a long time. Let's go to the Nasdaq 100, where we had seen some weakness over the last week and a half. I talked in the Tuesday video about how the Nasdaq 100 peaked along with the growth proxies that we watch on August 5th, and ever since then there's been a little bit of a bleed in growth stocks, really no progress being made. Same situation in the Nasdaq 100. You can see we closed two closes below the 21 on the Nasdaq 100, but again, we gapped down. We held the 50-day moving average. We closed at the top of the range on Thursday. That was a good start. Follow through that on Friday above the 25 and closing at the top of the range. So we want to get two closes above the 21 to make sure, well, not make sure, to signify that the trend has some sort of a follow through to the upside on the short term. And again, you can see where we stand on the red line. That's our intermediate term 50-day and the long term 200-day. Let's go to the Dow Jones Industrial Average. Also showed some weakness Wednesday and Thursday. As you can see, two closes below the 21 there. Nice bounce, however, at the red line, the 50-day moving average, and close back above the 21-day on Friday today. So again, we want to look for a second close above there. So those are the three big cap indexes. Let's take a look at the mid caps. Had been showing some strength above the 21 and the 50 over the last couple of weeks, but that gave way on Tuesday. Three closes below the 21, four closes now, and also below the 50. However, we did see similar strength Thursday and Friday as we closed toward the top of the range on both days, but still below the 50 and the 21, and that's why in the trend gauge we've got that yellow arrow here pointing towards neutral from the 50-day moving average. Short term, we're firmly in neutral in the overall, but because of the improvement, the green arrow pointing back toward bullish. So mixed signals here. We want to see if they can play out next week and get more definitive. Finally, let's go to the small caps. Small caps actually had one close below the 200-day moving average, but good day across the board in small caps, both in growth and in value, and we closed back above our long-term trend there, but really looking not so good as the 50-day intermediate term and the green line. The 21-day short term have now rolled over. Small caps have some work to do. This is primarily because oil has really underperformed. but small caps, they're typically a signal of risk on or risk off. I think you can tell by what this chart looks like what they've been signaling. Now let's break this down into first the growth component, which had been weak and is still below the 200-day moving average, and the value component, IWN, which is above the 200-day. So much healthier on the value side of it, but let's segue now into those 5 growth proxies that make up the G5. You've got your IWO here. I just showed that weakness below the 200-day moving average. The second one is FFTY. This is the Investors Business Daily Growth Index. Note the relative strength, this line here. You can't just look at the chart. You got to look at how things are performing on a relative basis. They peaked also 2 weeks ago on a Thursday and have been trending lower since then, but finally some relative strength come in the last part of the week as we held the 200-day moving average and got back above the 50 and the 21. Next is Qqqj. This is a Nasdaq mid-cap growth proxy. Same situation, peaked 2 weeks ago on a Thursday on 8.5, trending lower since then. Strength the last 2 days, especially to close the week. Now we need to stop that bleeding. But again, it's a start. But this is what growth stocks have been doing over the last 2 weeks, and we need to get that to change. And I'm going to show some good setups when I go to the 21 over 21 list. We do have some of the best stocks. Remember, this is an index, so there's 100 stocks in here. That means that 50 of these are going to be above average, 50 are going to be below average. We're fishing in the pond of the above average setups, and we'll talk about them a little bit when I go through the 21 over 21 list. The third one that we look at is ARKK. Sorry, the fourth one that we look at, ARKK. Same situation, extreme lack of relative strength over the last 2 weeks, trapped under the moving averages. And finally, PDP, which is a momentum ETF. Doesn't look as bad, but on a chart, as it held the 50-day moving average, but on a relative basis, you can see this relative strength line has gone nowhere but down over the last 2 weeks. So that's really what we need to see change. Let's go now to the 21 over 21 list. Let's get these charts back sized correctly. And first we're going to talk about, first let me show the whole list. Let me sort it here by symbol. We've got 10 sectors, 18 different industry groups. And we'll talk first about the ones that got popped off from last week. So 3Ds, they all begin with a D, the ones that failed. So getting punted off the list, first of all, was Docusign. This had been a nice leader since their earnings report back in June. We rode this trend higher. It paused when it got to the top of the base here, went sideways, bounced off the 21, nothing wrong with it. Tried to break out again, but just couldn't quite do it. Bounced off the 21 again, and then the failed breakout. Whenever you see a failed breakout like this and reversing down, it's a red flag, and it really has done nothing good since then. However, it is holding the 50-day moving average. Actually a low risk entry point here, but the 21 has rolled over and we're looking for the best of the best. We want to be above the 21-day green line. So Docusign punted off of the 21 over 21 list. Next one, Domino's Pizza, DPZ, big move up on earnings, but this has been sold into over the last couple of weeks. As you can see, it just trickled down, held the 21, had a nice bounce here. On good volume, but the last 3 days, no siree. Break of the 21, closed below on volume today. So Domino's Pizza goes away. This has been on for an extremely long time, and we had a very nice run up above the 21, but all good things must come to an end, and DPZ coming to an end this week. And then finally, Dynatrace DT held on to the 21 at the end of last week. It's held the 50, but the 21, the green line, has rolled over, and we haven't been able to get back above it. So it has gone from very classic. Let me zoom in on this here, because we've been seeing a lot of this as the green line is supporting it supporting price on the move up. We bounced off it 2-3 times here, but then a move below, and then 3 days in a row try to get back above it, but it's gone from acting as supporting price to now acting as resistance, keeping the price from going higher. And this also, look at the relative strength line. You're going to see this on a lot of stocks that I'm going to be talking about today, about how they peaked 2 weeks ago. And this really didn't show any strength over the last 2 days, so that's an exception. A lot of stocks that had been pulling back did show strength Thursday and Friday. This is one that didn't. So let's get back here. Those are the three that were booted off of the list. Let's now sort these by number. The newest members are the ones that were just added. We actually had an extra one on the list last week, but so 2 new ones this week. Let's start off with the first one, ZIM, Transportation Shipping. This was a leader for a while, recent IPO, formed a base. All stocks form a base at some point. This is a first stage base, reversal near the top of the base on Wednesday. Kind of what happened with growth stocks, but it did show some strength over the last 2 days. Bounced back, held the 21, a positive outside day today. They reported earnings. As long as the lows from the last 2 days hold, this looks pretty good. Next one to join the list is one that was on the list a couple of weeks ago, but fell off as the 21 rolled over. But this is what you want to see from leading stocks. The next support level down is the red line, the 50-day moving average. It bounced off there twice, and now volume came in Thursday and Friday, got back above the 21, and is now challenging for all-time highs. Medical stocks have been working pretty well. InMode just shook some people out, including us. We owned it. We sold it when it went below the 21. Maybe looking to get back in it now if it goes sideways and tightens up and volume dries up. So those are the 2 new ones. Let's follow up with the rest of them that are on it. Now remember, if you see the red flag over here, it means we own it in-house. Upstart, we own this. Extremely big volume move up on earnings, followed through to the upside. Lighter volume on this pullback right to the pivot, the way we want to see it, as long as it holds this 8 EMA, that's the faint purple line, and this 190 area. This is in good shape. Next up, Dexcom, another medical stock. Very good reaction to earnings with the gap up, went sideways, pulled back, held to 21, volume dried up, and now it's made a nice move. Volume not there on this move, but it's acting very well. Got back above this 500 level and had a nice close to the week. Datadog, another one that we own in-house. Again, big volume move up on earnings. We're always looking for that. That means that Wall Street was offsides. It's under-owned by the big funds, and they're piling into it. Lower volume pullback, bounced off the 8 EMA, tried to make new all-time highs, and now has consolidated over the last 5 days, holding the 8 EMA. Zoom Info, ZI, we got stopped out of this on the move earlier this week below the 21, but it's recovered, going sideways, volume drying up. This still looks good. It's at the top of the base. May look for another entry back into this one. Steel Dynamics, we booked our profits on this real harsh run up. It's had a very harsh pullback. But the pullback volume has been lighter than the move up volume, and it held to 21. So we're keeping an eye on here. There are several steel stocks that look exactly like this. Nucor actually might look a little bit better. But Steel Dynamics was on the list. It held 21. We kept it on the list. Square, we got stopped out of this finally yesterday. This is very disappointing action in Square. And again, note the lack of relative strength over the last 2 weeks. Finally settling some down over the last couple of days. But I really had high hopes for this one. This looked really good on the move up with volume on earnings, 2-day consolidation, follow through on more volume up to the top of the base, but that's it. It paused along with the rest of growth stocks over the last 2 weeks. So now it's pulled back on lighter volume. Look how light the volume is, so that's a good sign, but it couldn't hold the 21. The best stocks hold the 21. This finally, we got our third and fourth close below that. We sold the last little piece that we have. Volume comes into this week, and there's a lot of good setups like this right along the 21. 4-day, 5-day tight action. We may go back into this one. Square looks pretty good. Zscaler, this is an example of when things correct, they hold the 21. Let's compare this to CrowdStrike, which is a sister stock in this. CrowdStrike showed its weakness by breaking down 2 weeks ago. Zscaler, these two stocks very often move in tandem. Zscaler much stronger over the last couple of weeks. Never broke the 21. Tried to break out today at 250, reversed there. This looks pretty good. AMD, another one that shook us out yesterday. Same situation, disappointing recent 2-week action. So here's the lack of relative strength over the last 2 weeks, very consistent with what we saw in the growth proxies. Big move up on earnings, pulled back on lighter, on some heavy volume before it finally started to tighten up around the ADMA. Tried to turn back up. This is where we got in it, but it couldn't hold this area. Broke below it. Broke below the 21 with the weakness early yesterday in the market. We got stopped out on it, sitting right on the 21. We own NVIDIA, which is acting much better than this, and that's where we decided to put our money as focus on NVIDIA NVDA, as it had a great reaction to earnings and followed through today. Lending Club, we took our profits on this when it, again, growth stocks pausing over the last week and a half. Lending Club still acting pretty well. When it started to pull back and had a change in character below the ADMA, we locked in our 20%. It had a gap up today off of the 21 on an upgrade by an analyst. This looks pretty good. All the stocks in the 2121 list look pretty good relative to what's going on in the rest of the market universe. That's why they're on this leaders list. Snap, another one. Big move up on earnings, went sideways, tried to break out and failed. This is the red flag. We reduced our position when this happened, and then it started trickling lower. Lack of relative strength over the last 2 weeks, very consistent with all the leaders. Now it's gone tight over the last 5 days. This is a good setup. And if volume comes in Monday and this gaps up, we'll be taking a hard look at it. Costco, this has just been an absolute phenomenal leader. One pullback on a shakeout yesterday, all-time high close. Albemarle, this is a lithium stock. Great run up, made its pivot plus 30%, pulling back now, holding the 21-day on the pullback. Carvana, can't get enough used cars for sale, and they're getting top dollar for them. Carvana, fantastic earnings report. A little shaky after that, but then made all-time highs. But like most growth stocks, has been pulling back over the last 2 weeks, but it pulled back and did what the best of them do, hold the 21. Lulu, got stopped out of this week on the break below the 21, booked our profits on it, about 10%. Positive reversal on Thursday and Friday, closing right on the 21, not taking it off the list even though we don't own it anymore. It's been a leader. Look at the nice relative strength on this over the last several months before. Guess what happened over the last 2 weeks? Growth stocks have lagged. So this got caught up in that. If they come back into favor, Lulu will come back into favor. AVTR, medical stock, just nicely holding, trending higher above the 21. Net, we've held this for a while. Still one of our largest positions. We trimmed a little bit on this move below the 21 here. Added a piece of what we trimmed back today when it tried to move off the 21. No volume on this move off of it though, but this is doing what the best do, holding the 21. Chipotle, great move up on earnings, going sideways as, again, growth stocks consolidate over the last 2 weeks. Sound familiar? Bounced off the 21, higher high on Friday. That looks fantastic. American Tower, nice trend higher. The fact that it's number 2 here, these are in numerical order of when they were added to the list. So these ones that have the low numbers have been on the list for quite a few weeks. Pullback, break of the 21, but bounced off of the 50-day, the red line, back above the 21, so it never came off the list, and now all-time highs. Look at the relative strength over the last week. This isn't your traditional growth stock. It's a REIT that owns wireless towers. Nice cash flow on this one, nice dividend, nice relative strength. And finally, FTNT trended higher above the green line, the 21, for months now. One break below on the earnings report, immediately back up to all-time highs, and now consolidating over the last 2 weeks, bounced off the 21, and that's your 21 over 21 leaders list. Let's wrap it with some portfolio changes that we made this week. Earlier in the week, we got stopped out of Snapchat. I've gone over some of these in earlier videos, but Snapchat is setting up very nicely. This tight 5-day action is what you're seeing on a lot of these stocks. And although they've underperformed over the last 2 weeks, on a relative basis, as you can see from this relative strength line, they're set up nicely for a move higher. What the indexes did, the growth indexes and the Nasdaq 100 and the S&P 500, the way they closed the week is a reason for optimism. And if we get some follow through next week, we've got a lot of nice setups in growth leaders. Tesla, we stopped out of that on the news over last weekend about the investigation, pulled back, held the 21, but held the 50, that's the and the 200, which are overlapped here. But note, Tesla can't get back above the 21 here, and it's rolled over. So we're out of Tesla for now. We did a Qqqj short using the Nasdaq 100 when we broke below the 21. When we had the gap down on Thursday, we got out of it. Good, booked a nice profit on that. You don't want to stick around when you've got hedges on and the market starts going back to the upside, because you're losing not only out on the gains of the market, you're losing twice because your hedge is going against you. So we timed this pretty well. When we bounced off at the 50-day moving average, we got back out of the SQQQ. And today we added to NVIDIA and NET. Let me show NVIDIA because it's had that great reaction on earnings, shaken out. After hours, it was down. Then it came back. When it opened, we had a shakeout below the low before. The low of before earnings were announced. They had fantastic numbers. It recovered and then made a higher high today. So the second day, this is an inflection point when you announce earnings and have a reaction like this. Then you look at the top and the bottom of the range on the inflection point day to take your cues for what to do next. So we trimmed some NVIDIA going into earnings, added it back today to 1% buys. So it's a 4% size now, as it had a second day follow through after earnings. And that's what we're looking for the good behavior. IGV, we added to this. The top 6 stocks in this, and I'm going to close the video with this. The top 6 stocks, big cap, big software, are all acting extremely well. We had a shakeout below. Note the sideways action. So they're consolidating this ETF and the stocks that make up of it. There's 6 that make up the top 44% of this ETF. Shakeout below support, close at the top of the range, follow through to the upside today. So we bought this when it got back above the 21 yesterday. And the top 6 stocks in here all look pretty good. You got Microsoft breaking out, Adobe also breaking out. You've got INTU near all-time highs. You've got CRM near recent highs coming up to the top of its base, and you've got ServiceNow near all-time highs in the 600 level. So the top 6 holdings in there all look pretty good, and that's why we went with IGV. Bigger size, we've got 6% of it. Maybe adding to it if it continues to show strength, but basically we're buying those 6 stocks when you buy IGV, as they make up 44% of the index. So that's going to wrap it. As always, I'd like to hear from you. I'm on Twitter at @Vandenbord, email don@revereasset.com, or the phone number is 855-REAL-WEALTH. So finishing the week ending 8/20, what you need to look for next week is that the lows of Thursday hold. So on the S&P 500, that's the 4368 level, which coincides roughly with the 50-day moving average. We break there, it's a long way down to the 200-day moving average, the big black line there. So that's what we're focusing on, holding Thursday's lows. Thanks for listening. Have a great weekend.